Hello everyone. Uh, Today we are going to discuss about a bit about strategy, investment strategy, how to allocate your capital, how to allocate your money in various options you have. And particularly we will restrict our discussion to the stocks and companies. Bull run is like every animal, every Tom, Dick and Harry is running, and they are running at such a pace that you cannot make out which is a good company in long term and which company will survive. So ultimately, whatever we discuss on the channel, or whatever you discuss on the YouTube, or you watch a lot of interesting videos, or you read books and so on. But the important point is that this does not give you an idea how much capital you must allocate or you should allocate, or a judgment how to allocate capital to which company, which stock. That remains one of the important skill set that determines your portfolio growth. That nobody will talk about that, because that is where the key is to manage the assets. There are various models, there are various formulas, there are various financial modeling models, and a lot of numbers are crunched during this. But ultimately, what matters is people. Are you investing in right people? Are you investing, or are you betting on the right management, right people? Because organization, companies is all about people. It's not something very mechanical. And most of the times we try to understand these things. We try to understand these things in a very mechanical way. P ratios, growth, of course. But this is the outcome of human efforts, imagination, vision, ideas. And these are the people behind these numbers that ultimately matters. And of course, as the market has went up like anything in past 1 year, so the interest in earning money quickly has raised considerably, and this will definitely take a toll on many people. There is no doubt. One day suddenly you will find a lot of people are trapped in number of companies, and these companies are likely to be companies which did not perform in business. Small caps, mid caps. So basically I want to highlight that whenever you are dealing with any small cap company or micro cap company, or a company which is a player in that particular segment since very long time, and just because एक कंपनी किसी lucrative segment में है, that doesn't mean that company will perform. You must think that this company was in this segment since so many years. Why it did not perform for so many years? That is a question to be asked. So I want to convey a clear message that be careful when you are dealing with small cap companies. Whatever capital you have, do not allocate a substantial part of your capital in the small cap companies, micro cap companies. Now there is no definition of micro cap and small cap as such, but the companies which are having a limited market capitalization, 300 crore could be small cap, even 3000 crore could be a small cap company. So you need to understand that whether the company is performing, whether the people, whether the management of the company is faithful, are they performing people? Then only, and this cannot be understood by the numbers and annual report, to be very frank. This idea you can get only when you sit with the management or you observe them for a considerably long time. Otherwise it's not possible. So you need to be cautious when you are dealing with such companies. And क्योंकि अभी ट्रेंड ऐसा है कि छोटी मोटी कंपनियां ज़्यादा डिस्कस की जा रही है, It's a very clear-cut advice that you should limit your exposure to such companies. It could be very dangerous. You can lose all of your capital money if something goes wrong, and there is a good chance that something will go wrong with such companies. Just but on other hand, if you choose the right company, if you observe the company for a considerably long time, you look at the people, you look at the functioning of the management, you look at the management, you understand the management, you understand the market, then only you can think about allocating substantial capital. I'm not quoting any number because 5,000 could be a huge money for somebody and nothing for someone. So it's not the number that matters. Whatever number you have, whatever capital you have, whatever money you have to be very careful when you are dealing with such companies. Limited exposure. Let's say your portfolio is of 10,000 rupees. So at the max, I'm just taking one number, 10,000, you should allocate at the max 20%. At the max 20-25% to these new small cap companies which you are coming across, or micro cap companies. Don't allocate the capital because risk is invisible. Risk cannot be measured. In a sensible way, in a financial markets, you cannot measure the risk. As I said, although there are many financial models, many things are there, but you really cannot measure the risk. Risk always exists. The only thing you can do is to understand the risk. The point is to understand the risk and then take the risk. We cannot minimize the risk. This is stock picking is not a risk management exercise. Risk management derivatives. It is a derivative market. It is a future and options market which deals with the risk management. We are here to invest, and of course it has inherent risk, but that risk is really not measurable. There are a number of ways, but it really not measurable. How volatile is the stock, and these things will not really give you idea. Is it what kind of risk you are facing? If this would have been the case, a number of people would have predicted the risk. There are good examples. There are companies like big corporations are tumbled. Yahoo is one of the examples. So be careful when you are dealing with the small cap and micro cap companies because ये bull run है और bull run में गधे घोड़े सब एक साथ दौड़ते हैं और एक स्पीड से दौड़ते हैं, तो कभी कभी गधा घोड़े के आगे भी निकल जाता है. तो आपको ये need to be very cautious कि ये long term में how these things will turn out, and short term is like, you know, if you believe that there is something is possible in a short term, like in a week or day or two, if you can predict what is going to happen tomorrow, that means you are in a big delusion. It's simply not possible. It is not possible in a sensible way. Okay, and there are people, there are players in the market that you can't believe. They will outsmart anybody. They will outsmart everyone. So it's better to have a very long-term view, and we must focus ourselves in understanding the companies and the markets. This will definitely give you a good idea where to invest and protect your capital in the long term. I want to take an example. I had discussed about how the people plays a very important role. Britannia Industries, it's an old company. It's not a new company. It's an old company and it was existing in the market since very long time. Very long time Britannia Industries was in the market. Biscuits, the products was in the market. Everybody knows Britannia Industries. It was not a company which came out of the blue. It was there for 30, 40, 50 years. Everybody knows. But you look at the rise of Britannia Industries from 2013 to 2015, 16, 17. Phenomenal rise, because I was there when this the Britannia industry stock rose phenomenally, and in fact I invested in that stock around 2014. But what was the trigger? What was the trigger? Trigger was the managing director of the Britannia Industries, Varun Berry, was appointed as a managing director in 2013. Look at the Varun Berry, the profile of Varun Berry, and you will come to know that if such person is leading a company which is having a very good hold on FMCG sector or this consumable sector, definitely company is going to perform. And once I came across one article where the Britannia Industries, outpaced Parle-G for a while, and this happened because Varun Berry is leading the company. The company was there since very long time, and you look at the stock rise from the point Varun Berry was appointed as a managing director of Britannia Industries, and let's say 2-3 years, you look at the stock price. Here is the chart, from around 200 rupees to directly like 3,000 rupees. That was a phenomenal rise in 2 years, and it is predictable. It was predictable. It was predictable because if you understand that a certain people who are competent can perform exceptionally well, they can do well, they can lead well, you can bet on them. So this was a simple case I wanted to point out. In the same article, it was asked to Varun Berry, what is your strategy or how you did this. Varun Berry very simply pointed out. I would like to give you a snapshot of the article. See what he said. Britannia attributes its success to its people. The mandate was to shore up profitability and growth. The one factor that's made market leadership possible, if you ask me, is people. We picked up the right people for senior functions and made them perform much bigger roles than they were doing. This provided some accelerated learning besides pushing us out of the comfort zones. So this is what matters ultimately. Stock rise and the PE ratios and so on. If you look at the returns which Britannia gave during that span of time since the Varun Berry was appointed, and let's say next 2-3 years, it's phenomenal. The stock today, there are returns like 6,000% in past 7 to 8 years, and believe me, you can bet a good heavy capital on Britannia Industries. You could have had a heavy capital on Britannia Industries, which is a well-known company, management, Wadia. These are the people where you can rely on them. Okay, and of course the leadership, Varun Berry. The point I want to highlight is that it's very limited understanding when we are discussing about the products, the business segment, the business. Actually, it's always about the people, the management, and the kind of leadership, the kind of behavior, the kind of skills they have to deal with other people. That ultimately leads to a great success. And in the small cap companies, these things, really difficult to understand or difficult to predict. That is the reason why it is a good idea to keep a very limited exposure to small cap companies. Of course, if you really think that, if you really know somebody who is doing well and he is the person or that management you come across, you had a discussion with some company's management, or you are tracking them since long time and it is reflecting in numbers also, then you can think of keeping your little more high exposure. But it is always advisable to keep limited exposure to small cap and micro cap companies, in some cases even mid cap companies. Recently in past year we had IPO of Happiest Mind. It was bound to succeed. It was bound to succeed. There is no doubt, because the company belongs to Ashok Soota, an industry veteran. It's very obvious that company will perform 100%. Unless, provided Ashok Soota is there with the company. He is the founder, he is leading the company, and it's very obvious that the stock rose from around 350 to 1500, 1400, even span of 10 months. Not even 10 months, less than 10 months. Like 500 times returns in 10 months, predictable, because Ashok Soota, leadership, people. You can only bet on the people, and these are the ones who run the companies. Just I wanted to highlight some dangers which exist in these small cap and micro cap companies. Please be very careful when you are allocating your capital, and it is advisable to keep very limited exposure to such small and micro cap company. It could be any company. Need to limit your exposure to small cap and mid caps and even micro caps. That's how the risk can be limited. That's how the risk can be managed. Otherwise, just because it's a small company, the market cap is low, the PE ratio is low, and you are allocating, that's very dangerous way to understand the business and the company. Thank you for watching the video. Do share this video with your like-minded people and friends and relatives. Subscribe to the channel for interesting updates. Follow us on Instagram page, The Break Even Point. Thank you.